Hello everyone, welcome to my channel. Today I'm going to talk about why cash flow is king. You have probably heard the phrase cash is king, but in business and personal finance, there is an even more important saying cash flow is king. You can have a profitable business, a high paying job, or valuable assets, but if cash isn't flowing when you need it, financial problems can appear almost overnight. So, what exactly is cash flow and why does it matter so much? Let me break it down. Cash flow is simple the movement of money into and out of your business or personal finances. Money coming in is called cash flow, while money going out is known as cash outflow. Positive cash flow means you are bringing in more money than you are spending. Negative cash flow means you are spending more than you are earning. While that sounds simple, cash flow is often the deciding factor between success and failure. One of the biggest misconceptions people have is believing that profitability automatically means financial stability. That's simple not true. A business can report impressive profits on paper while still struggling to pay employees, suppliers, rent, or utility bills. Why? Because profits are based on accounting, while cash flow reflects the actual money available in your bank account. Imagine you own a construction company. You complete a $100,000 project and send the invoice to your client. According to your financial statement, you have earned a healthy profit. But if your customer does not pay for 60 or even 90 days, you will still have payroll, equipment, fuel, and suppliers' bills due today. Even though you are technically profitable, you could run into serious financial trouble because you do not have enough cash available. That is why many successful businesses fail, not because they end profitable, but because they run out of cash. Cash flow also provides flexibility. When your finances are healthy, you can seize opportunities that others cannot. Maybe your suppliers offers a significant discount for paying upfront. Perhaps a competitor goes out of business, creating an opportunity to expand. Or maybe new equipment becomes available that can increase productivity. Without positive cash flow, those opportunities often pass by because you simply do not have the available funds. Cash flow also acts as a financial safety net. Every business eventually faces unexpected challenges. Sales may slow down, equipment can break, customers may delay payment, or economic conditions may change. Businesses with healthy cash flow can absorb these setbacks without panic. Those operating paychecks to paycheck often find themselves relying on loans or credit cards just to survive. The same principle applies to personal finances. Many people earn decent income but still struggle because their expenses consume nearly every dollar they make. One unexpected medical bill, car repair, or job loss can create immediate financial stress. On the other hand, someone with positive cash flow has room to save, invest, and prepare for life's surprises. Managing cash flow starts with understanding your numbers. You should know exactly how much money is coming in each month and exactly where it's going. This means regularly reviewing bank statements, tracking expenses, monitoring income, and identifying unnecessary spending. The more awareness you have, the better decision you can make. Another important strategy is getting paid faster. Businesses can improve cash flow by sending invoices immediately, offering incentives for early payment, requiring deposits before starting projects, or accepting digital payment methods that speed up collections. The faster money enters your account, the healthier your cash flow becomes. At the same time, it's wise to manage expenses carefully. This does not necessarily mean cutting every cost. Instead, focus on spending that generates value while eliminating waste. Negotiate better payment terms with suppliers. Review recurring subscriptions and avoid unnecessary purchases that do not contribute to growth. Maintaining a cash reserve is another critical habit. Financial experts often recommend keeping enough cash on hand to cover several months of operating expenses. These reserves act as a buffer during slow periods and prevents short-term problems from becoming long-term financial crises. Even setting aside a small percentage of each month's income can gradually build a strong financial cushion. Forecasting is essentially important. Rather than reacting to problems after they occur, successful business project future cash flow weeks or even months in advance. By anticipating seasonal fluctuations, major expenses, or slow sales period, they can prepare instead of scrambling for solutions at the last minute. Technology also makes cash flow management easier than ever. Modern accounting software can automatically track income, expenses, invoices, and upcoming bills. Real time financial reports allow business owners to identify potential cash shortage before they become emergencies. The sooner you recognize a problem, the more options you have to solve it. One common mistake is confusing revenue with available cash. A business may generate millions of dollars in annual sales, but if customers consistently pay late or inventory ties up too much money, cash flow can remain weak. Revenue looks impressive on paper, but only cash pays the bill. Investors, lenders, and financial institutions also pay close attention to cash flow. Positive cash flow demonstrates that a business can meet its obligations, repay loans, and continue operating successful. In many cases, strong cash flow is considered a better indicator of financial health than profit alone. On time, ultimately, cash flow represents freedom. It gives businesses the confidence to invest, hire employees, launch new products, and navigate economic uncertainty. It gives families peace of mind knowing they can handle emergencies without falling into debt. It provides stability during difficult times and opportunity during good times. The bottom line is simple. Profits are important, but cash flow keeps everything running. You cannot pay employees with profits listed on a financial statement. You cannot pay rent with unpaid invoices. You cannot invest in growth if every dollar is already committed elsewhere. That's why successful entrepreneurs, accountants, and financial experts repeat the same advice over and over again. Cash flow is king. If you make Managing cash flow priority by tracking your finances, controlling expenses, collecting payments quickly, and maintaining healthy reserves. You will build a stronger financial foundation that can support long term success, whether you're running a business or managing your personal finances. Remember, businesses do not usually fail because they lack ideas, they fail because they run out of cash. Protect your cash flow, and you will give yourself the greatest chance to grow, survive challenges, and achieve lasting financial success. Thanks for watching this video, and do not forget to subscribe to my channel.